Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, December 11, 2008. Australia's economy shed 15,600 jobs in November, and the unemployment rate climbed to its highest level in a year. This piece of data will put pressure on the RBA to continue cutting rates in order to prop up the economy. The decline in jobs was the biggest since May. The RBA next meets on February 3rd and is expected to cut rates by 50 to 100 basis points. Despite the weaker Aussie employment data, the Australian dollar surged against the US dollar. From a daily low near 0.6540, the pair rose 230 pips to test the 0.68 level. There was general greenback weakness overnight, which was accelerated by poor US fundamental data, which we will get to later in the broadcast. Meanwhile, the Swiss central bank cut its benchmark interest rate by 50 basis points to 0.5%. in response to weakening economic activity and fears of a possible recession in the country. That brings the rate to a 4-year low and follows an unscheduled 100 basis point cut on November 22nd. The euro was a strong performer today, as ECB member Stark signaled policymakers are reluctant to keep cutting interest rates aggressively. The euro-Swiss franc pair was able to break out of its sideways pattern to climb to the 1.58 level. That was a 190 pip breakout from resistance around 1.5610. The franc did continue its gains against the dollar, however, which was losing across the board. Staying with the euro, it hit a new all-time high against the pound slightly above the 0.89 level after a 100 pip move into today's session. This continues a 2-week-long uptrend in the pair that began on December 1st around 0.8250. Turning to the U.S., the Labor Department said that the number of Americans filing initial claims for unemployment benefits rose to 573,000, an increase of 58,000 compared to the previous week. It's the highest amount of new claims in 26 years. The number of people continuing to claim benefits rose to its highest level in 34 years, as 4,429,000 remained on the payrolls. The U.S. Import Price Index fell for the 4th consecutive month, declining 6.7% in November. That decline was the largest one-month drop since the index was first published monthly in December 1988. In a third release, the U.S. trade deficit widened for the first time in 3 months, increasing to negative $57.2 billion. A record increase in the quantity of oil imported offset falling oil prices and plunging car sales. The figure was much bigger than expected. The euro-dollar pair surged today, climbing 400 pips from its open to set a new 7-week high at 1.34. The dollar was pressured overnight, and the weak trade and jobs data added extra strain. The LIBOR rate, or the cost of borrowing in dollars between banks, fell to its lowest level since September 2004. There seems to be a sense that the absolute panic that gripped markets in October are starting to cool, and traders may be unwinding some of their dollar longs. The dollar-yen pair slid 160 pips to set an intraday low at 91.15. That is the lowest level for the pair since October 24th. U.S. equity markets started lower, though the Dow managed to crawl back into positive territory, which helped the greenback pair some of its earlier losses. With the dollar down, oil prices climbed to the $48 a barrel level. In Canada, the Canadian trade surplus narrowed less than expected in October. Exports outpaced imports by 3.8 billion Canadian dollars. The better-than-expected figure was a positive sign for the Canadian economy, but trade will remain pressured in the fourth quarter. In a second release, the new housing price index fell 0.4% in October on a monthly basis and cooled to 1.5% in annual terms. Falling housing prices reflect a weakening housing market as the Canadian economy strains in the face of a global recession. The Canadian dollar strengthened against the greenback on its better-than-expected trade news and on the weak U.S. fundamental data. Also, with oil gaining sharply, that was another factor helping the loonie. The U.S. dollar-Canadian dollar pair fell around 420 pips during the session, setting a new 3-week low near 1.2160 before rebounding about halfway in later New York trading. In upcoming releases, New Zealand releases its retail sales data today, and Japan posts data on industrial production and consumer confidence. Overnight, we get industrial production data from the Eurozone. Tomorrow, the U.S. will release retail sales, producer prices, business inventories, and the preliminary version of UMISH consumer sentiment. And that wraps up today's show. Thank you very much for joining us here at CMSFX.com, and happy trading.